Hot off the press, we have some brand new ethanol production numbers. This is the day of the week that they come out. And let's take a look at what we cranked out in the U.S. here this past week. So for total ethanol production, it was still over 1 million barrels per day, but it was 1.003 million barrels per day. That means we were down 20,000 barrels a day from the production seen last week. And that drug down the 4-week average to 1.019 million barrels a day. That was down 5,000 barrels from its average a week ago. Ethanol stocks increased as well. They were up 700,000 barrels, up to 23.2 million. And we actually imported a little bit of ethanol. Interesting, 11,000 gallons imported into the U.S. This past week. That doesn't happen all the time, so that's a little bit unusual in itself. All right, I want to go to the phone and welcome Brian Hoops of Midwest Market Solutions in Springfield, Missouri, get his thoughts on today's trade. It's been a softer go in the early trade, but Brian, I look at the corn market now and I see where it's turning higher. That's a little interesting. Let's take a look at that December corn contract, if we can. And in Chicago right now, we have that December now trading a penny higher at 369. So it's turned around about as much as it was lower earlier. On the soybean trade, not so much there. We have November down 3 1/4 at 890.5. So we'll stop right there with corn and soybeans. Your thought on this, where the market is just really kind of treading water for the time being?
Yeah, it sure is. You know, we're just kind of very choppy type markets, lower overnight, starting to firm up a little bit, led higher by the wheat market. Wheat is finding a little support that Egypt is out there tendering in 2 different tenders for some wheat, and it's very unlikely the U.S. is going to get any of this business. I'm looking at orders and offers from France and Russia being the cheapest in the world. I think that's where that wheat's going to end up being sourced out of, but just the fact that Egypt is taking some supplies off of the world market, I think, is a little friendly factor here. We're seeing a little short covering as a result. You know, the technicals are starting to improve a lot for wheat. Chicago broke its downtrend line last week. Kansas City's in the process of doing it this week, and that could lead to some short covering and should be a supportive feature for our corn and likely soybean markets as well.
So we have Chicago wheat on the nearby in December up about 4. Kansas City is about 4.5 higher this morning, as you mentioned. Even the Minneapolis wheat is trading a little higher now, about roughly about 3 cents higher. So can we carry this forward, even though producers are trying to decide if they want to add to their acres right now at this point or not?
Yeah, I think we can. You know, the funds are holding some pretty big short positions, and they'll buy those positions back and give us a little bit of a lift in here. I don't think there's any type of a real bull market in this wheat. There's just too much supply around the world. So if you're a producer looking at prices moving higher, making a decision where you want to either store or go ahead and sell some of the contracts, I think from a risk management standpoint, you're better off looking to sell rallies and then re-own with some option strategies that are lower risk, because there's unlikely to be a real bull market in here. We do have a little bit of crop struggles around the world, but Argentina, Australia are going to have smaller crops than a year ago, but it looks like Russia is going to be a pretty dominant exporter of wheat. France has a large wheat crop, and just a lot of that wheat in the European Union is going to be flooded onto the world market.
Okay, we'll come back in a moment and examine the latest in our livestock trade on a Wednesday. We're talking with Brian Hoops, and we'll be back after this. Well, the live cattle market is turning mixed here today. Let's take a look at where we now stand in Chicago on the futures. We have the October up 20 at 99.55, but you have December down 8 at 105.28. Now it's down just 1 tick, down 2 cents. February currently 15 lower at 111.63. And let's move on to our feeder cattle market. Currently on feeders, we have October now 38 higher at 137.68 per hundredweight, and you have November 47 higher at 135.53. But you have your deferreds for 2020 out there about 13 to 30 cents lower. Now, if you look at the lean hog market, this thing is just crazy here the last 2 weeks. Hard to get a handle on this thing. Remember, we closed December limit down yesterday, so we're in an expanded limit mode. Well, now you have October up $1.05. And you have December down 25 at 67.42. So I guess you'd call it follow-through selling, but it's only on 1 month. And February now up 88 at 74.42. I don't know how you make sense out of this one, Brian.
Yeah, it's pretty hard to. The hog market a lot of times doesn't make a lot of sense. They are very choppy and very hard to trade for a lot of people. This market is really influenced by some spread trade today, what we have been this entire week. Fundamentally, hog weight's down just a slight amount from last week, but still well above last year. It tells us we've got enough supply that won't be an issue. The cattle market, I think, is waiting for some cash trade direction, and it may come from the Fed online auction. It's just a low volume, but they do want to see what's being offered out there and at what prices.
I am hearing off the wire that asking prices are hovering more around 103 per hundredweight out in the plains for cash cattle today. Would that maybe lean toward indications of maybe holding that $100 benchmark here in the cash market?
I would sure think so. Show list numbers were down a little bit this week, and that's going to be a supportive feature. Really depends on what happens with Saturday kills. That is a big component of what we're going to do with this cash market. But I would not be surprised to see at least a steady type market this week.
And it did seem encouraging yesterday to the trade that maybe that Tyson beef packing plant will open up sooner than the end of the year and get those repairs done in short order out there. So we'll keep close tabs on that and see how the trade reacts if that would be the case. Brian, thanks for the information today. Always good to hear from you. Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri with the latest on our grain and livestock trade.
All right, as always, thanks for keeping us up to date, guys.